Right. Thank you, everybody, for joining our webinar. Another Wednesday. We have our special guest today as well. We're all loaded and ready to go. There are many people interested to find out how they can get money to start doing real estate investment. Those kind of people who are interested to join and go further with collecting or saving, or put it this way, finding money to get into their first or second, they already passed the first line. And the first line is your motivation. Once you have the motivation, you've done a big part of it. And then you go for the second one. So I'm glad that you're all here. We are also on Facebook Live, and there are a lot of people watching, and they want to find out how we can proceed with going a little bit advanced in real estate investment. So as usual, I'm going to go through my very short presentation, and then I have my special guest Adney, who was here a few weeks ago, to share his story, amazing story. You all have to not only listen but get inspired and learn and go do the same thing, because success is all depends to you. Now, the goal of this real estate investment webinar is to help you guys to move from wherever you are, assuming some of you are newbie or average, to move to the next level, to be a savvy investor and stay away from assumptions, guessing, hoping, wishing, and come to a solid ground of real estate investment. And that's where you can really make money without guessing. So that would keep you away from going left and right with all the winds of, how do you say that, media's assumptions, news that would take you to the right and left and cause you to make mistakes. Now, quickly about housing market right now as we speak, what's happening right now in the market. I pull out this information about what's going on. This is the total residence. This is the transactions that happened last year and this year. If you look at the blue section, it shows June 2019, and the darker blue is June 2020. So the number of transactions was less, means the inventory was low. If the inventory is low, it means we have a seller market. There's less sellers offering less product, and there are buyers want to buy, so it becomes a seller market. Now, looking at the right side of it, is comparison between the month of May and June. So month of June, we had much larger inventory compared to month of May. Now, this is the price, and you see last year and this year, the price went up 11.9%, surprise to many people, and seasonally adjusted from month 2020 May to June. In 1 month, this is the average, went up 9.8%. So don't tell, well, my condo didn't move up. This is average for all the real estate properties in Ontario. Now, this, I pulled it out today. It said, Toronto, this is Toronto Stories, said Remax, Toronto's condo market could soon become a buyer's market. I think we are on the right direction. Now, I want you to pay attention to the way they put it. You see the word could? I used to not be able to see that word sitting there. So could would open the door to all kind of assumption. Now you come down a little bit on the bottom. It said Ontario has already surpassed its peak, then goes on to said that this could also be potential for moving to another direction, which is become a seller's market. So this, I got it from media. Now I'm checking it with the second party to see if what they said is right or not. So I pull out this one from Toronto Real Estate Board stats, and what I see here for the month of June compared to May, and the orange line represent 2020. So in month of May, we had less properties on the market. This is not the price, this is the inventory. So month of May, we had less property in the market, means we had a strong selling market. Now, month of June, the inventory went a lot, so the market came to a more balance. So the buyers, they have more options, they relax, and the sellers start promoting their property more to get the buyers. So right now we are very much into the balanced market. Learning tools and materials, that's what I'm always offering the audience to take advantage. I have some of them, and I have some of them coming from Toronto Real Estate Board, for instance, and any other resources. I always grab this home index that is coming up every month, and I'm always looking at different part of it. One includes the 10 years. Now, how do I find the neighborhood that I'm interested and the neighborhood that is making money? I'm not biased to necessarily go to Ajax and stay in one area. I'm open to make money. So the criteria here is to make money. And of course, I don't want to go to Alberta. So whatever I have around me in GTA, I believe is a gold mine, but let's pick the right property. So I'm looking at, in this chart, I'm looking at two areas. Look at these two areas. One is in Halton. The other one is actually, it is on Glen Williams in Halton Hill. The other one is part of Oakville. See, within 10 years, these two areas result two different growth. So which one would I take? I would, of course, go to Palermo West, which I've done. So that's one of the tools you can always use. You can always send me a quick email. I can send that to you as well. It's 200 pages and it's renewing every month. This is my YouTube channel. Please go there. There are tons of resources for you guys. You can always subscribe. I ask you to do that and just listen to any of those videos. This is my Facebook. You can always go there. This is for investors. If you have any idea, question, anything you want to put in there, feel free. It's for you. These are the written material. These are the books that I wrote. The first one, Think Beyond Your Limits. I think that would help you to cross your fear, and it's more of a mindset. The second one is very, very technical. You can get them in Amazon.com. This is my teaching material online. You can go and get one. Here, I'm trying to give you a complete startup package that would help you to move from wherever you are to more of a savvy investor. In there, you're going to see the reason for this is to help you find money-making properties without falling into the typical pitfalls, such as buying flat line, no growth property. And that's one of my expertise here that I'm focusing. I don't buy losers property. That's very important because I'm using home equity that I'm building up in a house to buy the next one. I cannot wait 10 years for the growth to happen. I need it ASAP, let's say 2 years, 3 years. So it's very, very crucial to pick the right properties. Now here's one example of that. The very last row on the right shows the growth in 10 years. We covered already that one. Now see on Victoria Village, the growth in 10 years was 25%. Not a big deal. So knowing this, the technique that I use into my teaching, I go after another area, let's say West Shore, I think it's in Ajax, that gave me, actually not West Shore, Village East. That gave me 156% growth in 10 years. So as a savvy investor, I study everything, I go after wherever I can make the most money. It would also give you the, tell you the hidden costs that burns your profits. You have to watch insurance surprises, joint venture cautious, watch list. These are the things you have to be aware and pay attention to when you join venturing with someone else. Landlord nightmares, and this course is in a very easy language, and you don't need to be an expert to do that. Now, voila, our special guest today here is Adney Fernandes. He was with us a few weeks ago. Very gifted gentleman with a lot of knowledge in multiplexes. He has started, actually, I'm stopping right here and ask him to take over and tell us his story again and how he started going and getting money to invest and to go on with his journey of real estate investment. So, Adney, here's the platform for you.
First of all, thank you, Ashton, for inviting me again. I had a lot of fun the last time, And I was hoping you'd invite me again so I could deliver more value to
Good.
your clientele. So thank you again for inviting me out.
Pleasure.
So I'm just going to share my screen here. And just confirm for me, Ashton, you can see my screen?
I do not yet.
Okay, so we'll stop sharing yours and then just let me know if it works.
Okay. Okay. You see your presentation. Sure.
Beautiful. There you go. Okay, let me get started here. Okay, guys, thank you again for coming on. Again, Ashton, we really appreciate the invite. I just want to let everybody know Ashton asked me to deliver a lot of value in today's webinar. In fact, what Ashton wanted me to talk about was where to get money, perhaps an easy way to find money, because it seems to be a source of contention for a lot of people. Everybody's worried about where to get money from. After doing this for 15 years, I can tell you, it's actually not hard. It can be complex, but it's really not hard. Once you know where to get the money from, which I will show you today, you won't have a problem finding money, okay? So before we go on, I just want to tell you a little bit about myself so you know who you're getting advice from, right? So my name's Adney Fernandes, of course. I started 15 years ago working 3 jobs, actually. I was working 2 full-time jobs and 1 part-time job. And together, on a weekly basis, I was putting in 100 to 120 hours a week with real estate on the side. So the real estate on the side, I'm talking about acquiring it, managing it, refinancing it, tenants, lawns, snow maintenance, all of that added up to another 10 to 20 hours a week. Okay, so it was a lot of hours per week. I was sleeping about 3 to 4 hours a day, so definitely quite intensive. After doing that for a couple of years, I knew I had to pivot. What I wanted to do personally was become a stay-at-home dad to my kids. Okay, so fast forward 15 years later, I'm now managing millions of dollars in strategic assets. I'm working between 10 to 15 hours a week on multiple businesses. And my focus really is family first, always. Family first, business second. I'm currently the president and CEO of 5 real estate related businesses. All of those businesses are revenue generating, income producing. They are not charitable or profitable charitable firms, but they are profitable. Okay. Some of my companies include the A2 Real Investments, which is my major commercial acquisitions business. Second one is the strategic mentoring and consulting, where I help people and companies get to the next level. A third one is a private capital business, where I'm pooling funds so that I can divest it out into different investments. The fourth company that I have is A2 Developments, and I'm currently acquiring land so that I can develop. Okay, so that's a whole entity in itself. So I'm becoming a developer and a builder as we speak. And the last company that I have is the OnCom Investment Club. I started that club a year and a half ago because I saw a gap in the market. So there is no multifamily and commercial club in Ontario. So I decided to start it and just do presentations, invite speakers, exactly like Ashton is doing, just more focused on multifamily and different kinds of commercial investments. Okay. I do specialize in my main company. I do specialize in raising money through investors, partners. And what I really do is I acquire, reposition, and then I manage and operate that property. Usually it's a commercial property. So some of the assets that I have currently include medical buildings, mixed use assets, multifamily, strip malls, plazas, flexible office spaces that can be converted to retail or warehouse. And I should point out that because I specialize in private money, I really have been focusing on that skill set. So every week I try to develop my skill set, whether it's learning a new skill, behavioral sciences, how to read people, how to pitch to people. So because I've been focusing on it for so long, I have raised over $30 million over the last 5 years alone. I've also in turn mentored a few clients and investors. They themselves have raised 5 million over the last 3 years. So just to give you an idea again of the current acquisitions, the last two were a medical building with AAA tenants and 16 acres of land for development. Okay, so I shared this the last time with Ashton and his group, so I'm going to share it again because it looked like a lot of people enjoyed hearing about the strategy. Uh, this is one of those things where a lot of people, when they start out investing, what they want to do is they want to invest, but they don't quite have a clear goal or a strategy. What most people do is they'll borrow from their line of credit, maybe put in a little bit of cash, they'll buy a house, they'll rent the top and bottom, and in 25 to 30 years, when the mortgages get paid off, then you can retire. And they usually buy 1 to 2 properties. That's the norm in the investment circle. The strategy that I came up with 10 years ago when I pivoted is for every property that I buy, for every commercial property, it could be multifamily, strip mall, plaza, office building, medical, for every property that I buy, I want to make me and my investors 1 to 2 million in profit every 3 to 5 years. Okay, so for every property that I acquire, every building that I acquire, I know within 3 to 5 years, I'm going to make 1 million to 2 million in profit. Now imagine buying 5 of those or 10 of those. Each of them makes 1 million to 2 million within the first 5 years. And so your exit options become a lot more flavorful. You have a lot more exit options later on with 1 million to 2 million per property. Anyway, I just want to share that strategy because I know a lot of people are looking for a strong strategy. Okay, here's another thing that I want to share with you guys. A lot of people ask me, why do I keep investing? Or why did I start investing even 10 years ago? Why did I start pivoting into multifamily and commercial? It's because of my 2 boys. Okay, so these are my 2 boys. On the left there is my youngest son, Zarian. He's 5 now. And my oldest is on the right. His name is Xavier. Okay, this is really why I invest. This is why I keep acquiring my buildings. They don't know this yet, so nobody tell them, but they have been retired for the last couple of years. They will, of course, not know until they're in their 30s, but I have retired my kids as well.
Adney,
Yeah?
do you want to adopt me as your son?
I'll consider it, Ashton. I'll consider it.
Yeah, and me too.
And so here's a secondary reason. So my first reason, it's been now 11 years that I've been a stay-at-home dad. My secondary reason is actually living a more balanced lifestyle with my family. So not only did I want to stay at home and be with my kids, raise my kids on my own without having to pay somebody else, I also wanted to have the lifestyle that goes with it. So both of those pictures, actually the picture on the left, I actually do canoe. That's not me, but that picture is accurate. So I actually am on that lake, which is Ramsey Lake. So I have canoed, I kayak, I fish, I hunt, all of it with my family. The picture on the right is actually a view from one of my offices here in Sudbury. Okay, so I just want to point that out, that once you get to a point where you have the right strategy, you're investing in the right asset class, having the lifestyle that you want, whatever that may look like, is definitely possible. All right, so let me share a little bit of insight into how to find money. Before we get into it, you as an investor need to understand what investors want. And I'm sure Ashton, as a realtor, can attest to this. Anybody can find money anywhere, but you need to know what the investor is looking for before finding that money. Okay, finding money is actually not that hard, as I pointed out before. You could find money for a business, you can find money for a loan, you can to buy a car, you can find money to buy lots of things. Okay, so in this case, we'll focus on real estate. And to focus on real estate before finding money, again, let's delve into what investors are looking for. Investors over the last 15 years on my end have been looking for capital preservation. Okay, so it's not just about investing that money, making a return. They want to protect that initial capital. Very important to investors. Second one, providing realistic returns. So if you bring a property from, I'll pick on Windsor, okay, because Windsor is a place where there are a lot of cash flowing deals. Okay, a lot of investors start in Windsor, Sarnia, and all small towns because they don't have to put up as much money and they're getting a high cash flow property. The problem with that is not everybody believes that you can make a 30% cash on cash return. Not everybody believes in investing in a very small town that nobody has heard of. So I'm not talking about Windsor right now. I'm talking about those small towns away from the big cities that a lot of investors gravitate to when they first start investing. Okay, those kinds of towns are fine if your if your goal is cash flow. But if your goal is wealth building for you and your investors, then you want to invest in perhaps a major city, perhaps even a minor city. So major city would be something like Barrie. Minor city would be Orillia, which is attached to Barrie. Okay, so whatever happens, growth happens in Barrie, there's a ripple effect that happens in Orillia. I'll give you another example. Think Hamilton and Brantford. Great examples. Think Toronto, Mississauga, or even Toronto and Vaughan, for example. Okay, you want to be able to provide realistic returns that an investor will believe. You also want to pick a place, a good location that investors will want to invest in. Very important. The third thing that investors look for is for you to prove your potential. It's not just about acquiring a great deal. Anybody can find a great deal, but you have to be able to prove that you can do what you say you're going to do. Okay, so the fourth thing is, of course, acquiring a great deal that comes with the territory. You're not going to invest your own money if you don't find a great deal, and nobody's going to invest with you as well. Okay, the fifth thing, show your track record. Do you have a track record? The reason you want to show a track record is so that you can convince, you can be credible to the other person. You want to make sure that you have a history of investing in even 1 to 2 properties with your own money. You know, did you put in your money and partner up on a big medical building? That counts as credibility because it's your money. I can tell you something. There are a lot of investors that look to invest zero money, Ashton, and they want to raise money from other people. It's not going to work like that. You've got to be able to prove that you are also invested in the asset class, in the market, that you're pitching to everybody else. You got to be credible. Okay. Another one that investors want to focus on is relationship building. It's not all about dollars and cents. Yep. It's also about relationship building. And I know Ashton is nodding, as well as a couple of people here. Yeah. You build out your network so that you can have relationships with other people.
Absolutely.
Okay. And the last one I'm going to talk about, this is a little bit of a bonus, is you want to focus on supply and demand for you. Now, I know nobody talks about this, so I wanted to bring it up. I came up with this, actually. Just like there is supply and demand in the market, there is a supply and demand for you. So if your supply is scarce, so I'll just talk about me for a second. If I'm the kind of commercial investor that can provide returns of, let's say, 15 to 20% annual returns against a very stable asset, and the investors, the money partners, start looking around and seeing who else is doing that, there's not that many people that do what I do. So my supply, me, is very scarce. There are only a few people in Ontario that do what I do, okay, at the scale that I do it. So thus my demand for my product goes up. And that's part of the reason why I'm able to raise money, why I'm able to operate my businesses as such. I always look at it from a supply and demand perspective for me. I look at the market and go, if I come up with a product, is there a supply for it? And is there a greater demand? So I could open up an online business today. I could open up a real estate investment firm tomorrow. I could open up a construction business. But what I do strategically, because I value my time, is I look at the low supply, if there is one, and a high demand. I'm hoping that makes sense to a lot of people. I am my own product, first and foremost. So if my supply is low, my demand will be high for the products that I come up with. Okay? It's just something to think about. So sources of capital, let's switch gears a little bit. I wanted to put this out because it's easy to say, put in your money, but where does that money come from? Okay? When you think about yourself and a lot of people, the money actually comes from a couple of sources. And I have these conversations with all my investors. Okay? So I usually have cash. The part of the funds may come from cash. Then part of the funds may come from a line of credit. Okay, it could be a HELOC, it could be an unsecured line of credit, a secured line of credit. The third source of funds to invest is home equity. Many people have equity in their homes and cottages. That is something that you should be looking at leveraging to invest into a multifamily and or bigger property. Okay. Another source of funds, so it goes in line with the home. If you have an investment condo, a house, a duplex, and if there is equity there, so the market is obviously growing, as Ashton nicely pointed out earlier, then why not leverage that equity and buy something a lot bigger? So if you can start pulling together a little bit of cash, some line of credit, some home equity, investment property equity, you'll come up with a sizable amount of funds to invest into one big project that can make you a lot more money. Another source of funds are investments like stocks, bonds, mutual funds, GICs, TFSA. The reason I put that in is because a lot of those kinds of investments, the stocks, bonds, mutual funds, GICs, TFSA, they don't make a lot of money. Okay, you're averaging between 1% to 3%. Sure, sometimes they spike up to 10% or 15%, but then they spike all the way negative. Okay, it's a very volatile investment. And I know this because I used to work at 2 financial firms. Okay, they're volatile. They go up. Your annual return is what you want to pay attention to over 5 to 10 years. And normally that's averaging 1% to 3%. So why not redeploy those funds and put it into real estate? The last source of funds that I came up with is RSPs. A lot of us have RSPs. So it's not just us, it's also our partners, our life partners, our spouses, our parents, our grandparents that have RSPs. Why not utilize that and invest it into real estate where you can make a 7, 8, 10, 15% annual return? And you also are part of the acquisition for the building as well. So I'm just putting these things out just to get your mind rolling. Okay, so you can see. So just give me 1 second here. Okay. So let's move to the next one. So this is the important part, where to find easy money. This is what most people are concerned about, Ashton, where to find that money. Okay. Now remember, if you're paying attention, you really want to start thinking of it backwards. Start reverse engineering. Okay. Before finding money, What are investors looking for? Really think about it, figure out what you can do, what you can provide, think about sources of capital. Now we get to the good stuff. The first thing that you should be looking, so where to look for money, the first place you should be looking is you. You got to look at your own resources, your own personal and investment resources. So do you have a house? Do you have a condo? Do you have a cottage that you can borrow from? Same thing with investments. Do you have an investment property that you can borrow from? Now, I won't go through everything because I've already talked about it. But if you're going to ask somebody else for money, you should be deploying your own money first. That's just the name of the game. Okay. The second place that you can look for money is friends and family. Okay. And by the way, this is where I looked for money. I actually looked for, initially, when I first wanted to invest into multifamily and then commercial, that's where I initially started looking. Okay? I'm not saying you have to. I'm saying start looking at who may want to give you money or partner up with you. Okay? So friends and family, think about your workplace. It's COVID-19. Lots of people are stuck at home. Lots of jobs are in jeopardy. People are not working as many hours. Wouldn't you like to provide them with the option to make money in real estate? So think about your work, your workplace colleagues. You know, for realtors like Ashton, you might be an investment realtor because that's what you specialize in.
Yep.
I guarantee you, not every realtor in your brokerage is an investment realtor, right? They have their own focus. So just as an idea, why not somebody like Ashton reach out to his colleagues, maybe throw a little lunch or a dinner, and perhaps pitch partnering up. Very easy to do. Because what's the worst thing somebody can say? No, thanks, Ashton. I'm not interested. Oh, well, life goes on, right? People are generally nice. So workplace, think about your own dentist, your own doctor. As you're getting your teeth cleaned, why not talk to the hygienist or the dentist about investments? Why not? Right? What do they do on their free time? What do they invest in? Here's a little tip for you guys. This is a good one. You guys ready? What you want to do is you want to ask them what their best investment is. So you can so for example, I'll go to a dentist or a doctor, right? They're doing their usual checks, whatever it is. They're yapping on about some medication or Novocaine, for your teeth, whatever it is. When you get a break in the conversation, ask them, hey, you know what? Mr. Dentist, Mr. Doctor, Mr. Accountant, Mr. Lawyer, I'm looking for a good place to invest my funds. I'm looking for options. What do you recommend as a good investment? They'll say whatever it is that they think is a good investment. Now it's your turn to chime in. Hey, you know what? I think real estate is a fantastic way. And then segue into, you know what? Just so you know, if you're ever looking for real estate opportunity, talk to me. What you're doing is you're opening the door. You're not doing a hard pitch. You're asking them for their opinion, then you're offering yours. Okay? That's a very soft way of engaging. So work, dentist, doctor, think accountant, realtor, your mortgage agent, your lawyer, really good people to touch on with real estate. Really good people to converse with. So number 3 is power teams. I call them power teams, but these are contractors, handyman, the appraiser that you used when you bought your house. What about property managers down the street, up the street? I guarantee you guys, if you Google right now, property managers in your area, for example, Oakville or London, wherever you live, Google property managers in that area, you can get to talk to 5, 10, 15, 20 property managers. Why not start the conversation with them? Then there are inspectors and engineers and so on and so forth. Fantastic place to find money. So between the first 3 lines, Ashton, you can get 20, 30, 50 people right there. Okay? Most people have some kind of a network, small or big, but reaching out to your core group of people is a great way to find money. And I do mean great. You could have millions of dollars right there. Okay. And then I've come up with some other ideas that I have personally used. How about charitable and networking events? So we all know if we go to a real estate seminar, right? It's a great place to network. What about charitable events? That's not a bad place to be. There's boards of directors, there's sources of funding from people. You never know who you're going to meet at these kinds of non real estate related events. So there's a great way to meet people. I've come up with another. Now, this next one is actually COVID 19 specific. So when COVID 19 hit, I had to pivot because I meet a lot of people. I meet 100 people or 50 to 100 people a year. So when COVID 19 hit and we couldn't network live, I had to pivot and figure out how can I keep on meeting people. This is what I came up with, and it does work because I have raised money. I actually network on webinars. Okay, I email, I private message other people, and I network with them. I get their name, phone number, and we chat the next day. I also network on Facebook and LinkedIn actively. So a little tip I can give you is to join real estate groups or networking groups. I forgot to put that one in. If you just go under Facebook, go under groups, type in networking, you'll see so many hundreds, if not thousands, of groups that come up. Join those groups. Start posting. Be active in the conversation. If nobody knows you exist, how are you going to find money if nobody knows you exist? You have to start being a little bit more active. Okay. Here's another tip. Kijiji. Kijiji. I know this sounds crazy, right? Webinars, Facebook, LinkedIn, real estate groups. Adney is flying off the handle here, right? I'll give you another crazy one. Kijiji. Go on Kijiji after tonight's event and type in real estate sale, or type in real estate multifamily, or type in multifamily for sale. You're going to see hundreds, if not thousands, of postings. Why not give them a call? Maybe they're a realtor, maybe they're a property manager, maybe they're the seller. Why not give them a call and start that active discussion and let them know, hey, I noticed your ad. I want to give you a call and connect with you. Can we have a little chat about investments? And then talk to them about money and where to find it. Because, people, realtors, think about the power team. So realtors, accountants, lawyers, doctors, dentists, think about it, guys. They all have family, correct? They all have friends. So if you want to find money and you're friends with these people, and you're now starting a conversation with them about real estate, you can ask them for a referral. Maybe your dentist doesn't want to invest because his funds are tied up. Why not ask for a friend or a family member? Hey, Mr. Dentist, I know your funds are tied up. Would you have any friends or family that are interested in real estate? Does anybody you know want to make a steady return? It's such an easy thing to ask for, but not a lot of people think about it or ask for it. Okay, think about all those people. So in the first 3 lines alone, so your own resources, friends and family, power team, that's 20, 30, 50 people right there. Now imagine asking each of those people for referrals to their friends and family. You've got a huge multiplier effect, okay? Entrepreneurs, the last one. Why not reach out to your local entrepreneurs? Now, of course, it's COVID-19, right? So you're going to reach out to your local businesses. So a restaurant owner down the street, maybe your dry cleaning guy or girl, maybe there's there's some kind of a business, a mechanic shop. Everybody has a website these days, most people. Why not look them up on Google? And when you find their phone number, give these local businesses a call and talk to them about real estate. Yes, you're cold calling, but you can soften the conversation by saying, hey, I live just down the street. I would have loved to visit you because you're down the street from me, but it's COVID-19, so I thought I'd give you a call. I hope that's okay. And boom, talk to them about their business first, then segue slowly into real estate. Okay, so There's the trick. Ask them what they want first or what they want to share. Then you can segue into real estate. So what you're looking for, honestly, is a good marriage. You're looking at, for everything that I'm suggesting here, whether you're looking for investors, whether you're looking for sources of funds from people, and here's an easy way to find money from lots of different sources. If you actually do the work, so for those of you who are listening, if you do the work that I'm telling you to do, there are hundreds of people right on this list alone that you can potentially reach. Okay? What you're looking for is a good marriage of perhaps they're providing money and then you're doing the work. Or you both put in money and you both split the work equally on properties. There's no fun in doing it alone because there's nobody to talk to. And I'm telling you, the easier way is to raise money from people and then do a marriage. Not every partner or joint venture is going to put up all the money. So figure out what they want and then see if you can marry them to you. Okay? So, Ashton, do we have time for a bonus slide or should we end it right here? I'll leave it.
Go ahead.
Go ahead. Okay, let me look at the time. 1 second. Okay,
By the way, if anyone has any question, you can always type it into the chat window, and
okay.
I can give
So
it to you.
I noticed it's 7:45, so I'm going to run through this last slide, the bonus slide, really quickly, okay? Then we can get to questions. Okay, bonus. I want you to think about what skills you have, for those of you who are watching. What skills do you have versus your partner? Okay, so let's assume for a second that you're looking for money, you're talking to friends, family, doctors, dentists, engineers, realtors, lawyers, and you're trying to convince them to partner with you. Before you ask them to partner with you, I want you to start thinking about what skills you have to offer. So here are a couple of high-level skills that I've written down that I have that you should also work on having. The first skill set is asset analysis and pro forma. So for those of you who don't know, pro forma is actually projections. So they are projections on numbers, on income, on expenses, okay, and growth and so on. Do you know how to do that? Another good skill set to have is due diligence and risk mitigation. It's not all about raising money and putting it into a property. You have to manage risk. You have to know how to protect that capital and then force it to grow. Okay. Another skill set you could possibly bring to the table is your $1 million strategy. One that I shared with you earlier, you can use. So do you have the ability to have $1 million strategy? And do you have the ability to execute on it if somebody gives you money? Okay. Here's another skill set you may want to think about: legal. Do you have the legal and accounting expertise, or do you have the right people in place in your team to help you navigate through this complex process? I've put in corporations. Do you know how many tiers you need to invest? What kind of commitment letters? Do you have joint venture agreements, shareholder agreements, commitment letters? So there's a lot that goes into the legal and accounting that you should know about before you pitch a deal to somebody. Because I guarantee you, maybe you'll wing it on the first deal. You might get lucky, but luck only carries you past the first deal or just on the first deal. After that, eventually you'll make a big mistake, which will reflect to your investor or your partner, okay? Another skill set that you want to have is operations and management. This is huge. If you don't know how to operate and manage your assets, your investors are not going to be happy. Okay, another skill set, renovations and development. This is huge. Do you know how to renovate and develop? Do you know how to manage the trades? Contractors, plumbers, electricians, drywall, HVAC. I could go on and on. There are 20, 30 different kinds of trades that you need per building. Do you have it? Have you managed people like that before? I can tell you from experience, it's not easy. Okay. Another skill set is strategic planning and development. Do you have the ability to put a strategic plan into place for a building? And do you have the ability to develop that plan over the next 5 years, 10 years? Okay. Each of us probably has one to two of these skill sets if you're just starting out. What you want to do, okay, this is my big tip, my big bonus, and I'll end it here. My big bonus, guys, is don't fumble through this wealth building formula. Real estate is very lucrative if you do it right. Get a mentor. That's the biggest thing that I would suggest, and I tell everybody this. I'm sure Ashton will actually back me on this one. Getting a mentor, going through some courses, going through some kind of education where somebody's holding your hand, biggest thing that changes the lives of most investors. Okay, you can do it by yourself and make the mistakes, or take a course, get a mentor, and you will actually fly through it. So I just want to throw this out there. My next event, OnCom Investment Club event, my webinar is actually tomorrow, Thursday, July the 30th. I'm running it at 7 o'clock, just like Ashton does. And if you do want to sign up, let me know. You can actually go online to my website right here. So it's going to be a2realinvestments.com. So I'll leave that on. You can go to the website, scroll all the way down, and then you can sign up for the events, or you can just email me in the chat box and I'll add you on. Okay, guys, thank you so much for having me out. I hope you found this information fruitful and useful. And I really do hope to see all of you who are watching this take action. Take Ashton's advice, make it so, right? Make sure that you are taking action. Do the course, get a mentor, do whatever you have to, but start investing today. It really is going to change your life.
Excellent.
Thank you again, Ashton. I really appreciate.
Thank you very much, Adney, for coming on board and help us with all the information. Quick question for you: how was your if you remember your very first joint venture? You look for money. What was your very first experience? How did you get hold of that investor, and how did you feel?
Sure. So I've been actually trying to raise money, honestly, Ashton, for 15 years. Okay. My first 5 years that I was doing residential, I begged, I borrowed, I would say whatever you want to hear. So basically, I was essentially begging for money. Okay. I was finding good deals. Don't get me wrong. I was finding great deals in really small towns that nobody's heard of. I was finding fantastic cash flowing deals, and I was begging everybody and their mother for money. I realized after begging for 5 years that I wasn't even able to raise a cent on 30% cash on cash deals, 40% ROI deals. Like even with the strong numbers, I wasn't able to raise money. So about 10 years ago, I pivoted to doing multifamily. So it was a 26 unit building. Okay, so first one was 6, then a 26 unit. For both of those, I pivoted into how I talked to people about money. I was no longer begging people for money. I had a skill set. I offered that skill set, and I offered an investment opportunity. It's an opportunity to invest. I was no longer begging people for money. So I really had to change my personal mindset on my worth. So my worth was more than most people after 5 years, because I had the experience of failing after 5 years. I knew what not to do. And so what I did was, from a mindset perspective, before I started approaching people for multifamily, even though I didn't buy multifamily yet, I was able to talk to people and convince them to partner with me instead of just giving me money. Okay. I wasn't begging for money. They're investing in an opportunity, and I showed them why they would invest in Adney, why invest in the building, why invest in the location, why invest in the building, which was a good asset, and then why invest in those tenants. I was able to outlay all of those out, and I was able to, I would not even say convince, but I was able to get the investor to appreciate what I was trying to do for my family and their family. And that's actually how I ended up scoring my first and second joint ventures on multifamily. So sixplex, 26 unit building. And those two investments actually got me to retirement
Great.
for a couple of
Excellent.
years.
No, that was great. I was about to ask you.
I've got a question actually, Ash.
Oh, sure, go ahead.
Hi, Eddie. Sorry. Thank you for the presentation. So you said that, so when you joint ventured with this person that got you the sixplex or the multifamily home, did you have to put money down as well?
He had to put up all the money. So the way I invest, so great question, by the way, the way I invest, my model is actually a 50-50 joint venture where I do all the work, they put up all the money. And all my deals for the last 10 years, I can tell you, I haven't put a cent of my own funds into the deal. So my job on my end is to be credible, is to be perceived as being successful, which I am. And my job is to present opportunities or products to people. And if it's the right time, the right kind of person, the right personality, there are hundreds of different things that have to go right. But if it's the right opportunity for them, then they'll invest. But I look for 100% money partners. I haven't had to put money into a single deal in the last decade.
Okay, that's great. And then one last one, sorry. Is it your name that goes on the title of the house if the person or the multifamily home, if the person's put in 100%, does your name go on it or both your names?
Both. I would recommend both. So that's where legal comes into matter.
Exactly. Yeah.
If you're buying, let's say you're buying a house with Ashton and you have a partner, right? What you can do is if they're putting in 100%, you can leave them on title and you can put a lien on that title so that if your partner tries to sell that property or refinance, at least you're notified of it. What I would normally recommend to the people that I mentor is that both of you go on title. Okay. Now, just to further that question, because it is a really good question, if you're buying multifamily or commercial, here's what happens. You actually create a corporation. In that corporation, you both are owners, so you're shareholders. You both have shares in it because it's 50-50. And then that corporation is what goes on title of a bigger property. So I know it's a little bit more complex, but that's how I do it.
I understand that bit. Yeah. Yeah.
Beautiful.
Yeah. Thank you very much.
Do you have any question? No? You okay? Okay. One thing I add to what you said regarding corporation.
Yeah.
These are the technical things I'm dealing with every single day.
Mm-hmm.
You have to double check with your lawyer or maybe accountant. But I noticed that the banks they give you a little bit harder time to give mortgage to corporation rather than individual. So that's the challenge for you. Number two, going back to the original question, if you want to go on the deed of the house, based on my understanding, is the banks are also considering your presence there. So the banks would check you and your partner. Now, go ahead.
No, sorry, I didn't mean to interrupt, Ashton. So I just want to chime in. A bank will, on those 2 points, a bank will always, whether your name is on the paperwork or not, if a bank knows you're somehow involved in a deal, they will check your credit. They will check this, 10 years ago, 8 to 10 years ago, if you were not putting in the money, then they did not check your credit. They did not check, who you were. They didn't check your job, whether you can support it. Now it's actually changed over the last 5 to 6 years where banks have noticed a lot more fraud going on. And so what banks do is, whether you're the money partner or just a business partner or general partner or even a contractor, if you have something to do with the ownership of that property, where you're benefiting from it when it refinances or sells, a bank will ask you for all the paperwork, as if you were putting in money into the deal. On the commercial side, I want to touch on the point you made previously. It actually isn't harder to get money from a bank or a credit union for corporations. That actually depends on who is the owner, who is the general partner, who is the person that is operating that company, who is managing the asset, how big that asset is. So there are a couple of things, Ashton. I can tell you, this is personal experience. I actually have had TD offer me, this was last year, pre-COVID, 10 million in an unsecured line of credit under my corporation to go buy. I have no assets under my personal corporation because I have holding companies, and they offered me a $10 million line of credit. And after that, I actually ended up buying a medical building. It was a brand new corporation, so nothing to do with Adney. I created a brand new numbered corporation. I put my partners in. I was also half owner. The bank looked at it. It took them 1 week to give me just under $2 million.
Based on?
Just based on the asset and then based on me. So just to elaborate, here's what the banks do, okay, on multifamily and commercial. Yep. They look at the asset first. They'll qualify the asset, as you know. But then what people don't know is they qualify me. They qualify the expert partner, the general partner, because I was on a 2-hour interview with them as to why they should give me $2 million, which was 75% loan to value. They don't want to give me $2 million if they know that I don't know what I'm doing. So I've got to be able to have a business plan. I've got to be able to have a corporation. I've got to have maybe some assets so I can show them an example of what I've done. So I would not say it's necessarily harder for corporations. It's actually much easier for corporations if the person managing and operating it is successful and they know what they're doing, and they can convince a bank that, hey, you know what, you should give me an 80% loan to value, even though it's $2 million or $5 million. It actually is easier on the commercial side. So I just want to chime in there.
Good. So with the corporation, let's say there are two partners, and if you have, let's say, 5 investment with 5 different joint venture partners, so you're going to form one corporation with each?
Correct? No, one corporation. So you want to think about efficiency, right?
Let's say investors A,
yeah.
Then you buy a building with him. Then tomorrow you come across investors B. Are you going to make another corporation?
Yes. In that scenario, yes. If you're buying different properties, I have different corporations. Yes. If it's the same property, then even if it's 5 investors, I'll pull them in the same corporation. So that's part of legal, right? So Ashton, to my point earlier, it's so important to have a good real estate power team. And in that power team, to answer these kinds of questions, I recommend to everybody watching, get a mentor. Because the questions Ashton is asking me, and of course his group is asking me, those are the mini questions that sometimes it's difficult to get answers on. Yeah. So having a mentor who's been there, done that, takes a few seconds, as you've seen, right? For a person who knows what they're doing, man or woman, if they've done it several times, they can mentor you on it, as long as they're successful. That's the only caveat there.
Good. So these are very important technical questions. As you go along, you come across this question. It's like a ship that has many holes. If you don't answer all of them, the water would come in and you sink.
I like that analogy. I really like it. No, that's absolutely true. I mean, you know, when you're investing in residential, I'm going to chime in with your analogy. When you're investing in residential, it's like you having a boat. It's like a fishing boat. Yeah. Okay. Yeah, there's not that many places where there's going to be holes. There's less problems with a small boat. But when you go up to multifamily and commercial, now you're getting a much bigger boat, much bigger motor. Now you might have multiple rooms in that boat because it is a much bigger boat. You might have sails on it. You might be able to go out into the open sea with it. So when you have a bigger asset, a bigger boat, there's more places where you can have holes. There's more things to go wrong. So why not get a captain for that big boat? Exactly what Ashton is saying, guys. I completely agree. He's absolutely right. With a bigger asset, as you're investing in multifamily and eventually perhaps commercial, you want to have somebody guiding you through the rough seas. You want to have somebody overseeing you, watching your back. Good point, Ashton.
And what I like to see is I come across real estate investors said, you know what, we're going to buy one house, that's going to be our investment, that's the end of it. No, what I like you to do, because real estate investments is wealth building machine.
Yes.
So if you're looking at that one, why you start with one? Make it 2 or 3. So when you come across a great property to invest, always keep in mind that this is just the beginning. Let's build up the second wall, third one, fourth. And when you look at them, it's like a brick off the wall. You have to put them straight. If you make a mistake, you have you ignore or you don't do your due diligence. You put the next one in the wrong angle, next one. After 3 or 4, the wall will crumble down, and that's going to create a disaster.
And that's Ashton, that's exactly what I'm seeing, during the COVID-19, where a lot of people, I'll give you an example, who are putting 0% or 5% down on properties. They were highly leveraging their properties.
Yeah.
Now COVID-19 has hit and they are struggling to collect rent. They're struggling to pay the bills. They're struggling because they've lost their job. Nobody imagined that we would be in this COVID-19 economy, but people like me who've been doing it for 15 years, I experienced this back when we had the financial crisis in 08, 09. I experienced this measure of it when we had the avian flu, the bird flu. So, and there were other things that happened too. So you have to learn from our economy today and then figure out how to strengthen your portfolio, right? How can you put a barrier around it? How can you make your posts or your base much stronger so that you can still keep building up? And I think one of the things people should be looking into is what skills can I develop to strengthen that bond? As you buy properties, buying one, you might get lucky, right, Ashton?
That's true.
But buying 5 or 10 of the same asset, no matter what it is, you've got to have a system. You've got to have infrastructure.
I agree with you. You don't believe how many individuals I come across. I get calls where I see people, they are going out and guess. Guessing is the worst enemy. So whether you partner with a mentor or someone went around this way, like for me, I study books, CDs, I went to clubs, I had mentor to guide me towards the right direction. I've seen people buying one after another, let's say 3 or 4 property from the builder. They said, we're going to close in 6 months, and the next one after that is going to be the month 10th and 11th. I'm going to close it and I'm going to flip it. And you know what's happened to him? The first one he closed, the economy was so bad, he couldn't sell it. And he didn't have money to close the second one and third one. And long story short, he let them go and he ran out of the country. That's one of them. I've seen many. A month ago, I had a call from this gentleman. He was working as an investment. He was working with assignment. He bought like 5, 6, 7 condos assignment to flip it. Well, surprise. I had a call, said, listen, I have 2 assignments left. I have no ones to buy it. I don't know how to flip it. Can you help me? I said, listen, 1 week is, give me more time.
Yeah.
And I never heard back from. So what the strategy are you using? It's very important. As I said, put the first brick in the solid straight line, do the second one, but every single brick can make or break your future. So put it with a lot of wisdom and a lot of knowledge and due diligence. Do not have mercy on the process that you do, and don't close your eyes. I think Adney can testify on that one as well.
Yes, a lot of people close their eyes. They'll think, oh, you know what, this deal doesn't look so good, but you know what, it's okay. My last deal was good. I'll make it up. They massage it. They make it out in their head to be nicer than it is. People make those mistakes all the time. And so what Ashton said is absolutely right. Your first property is that brick. When you buy the second property, you want to not just put one brick on top of the other brick, correct? Mm-hmm. If you're in construction, guys, you'll help me out here. What you need to do to attach two bricks, Ashton, is you need to sand it, you need to put a paver on it, you need to put concrete on it. So you need something that will bind the first brick to the second one, and you're reinforcing what's around that brick, not just what's inside, because the concrete comes a little bit out.
Well said.
And and so that's what you want. So every brick that you acquire, every house that you acquire, guys, or every building, you want to reinforce it with concrete, which is basically my way of saying you have to learn a new skill. You have to adapt. You've got to take a course, get a mentor, do something where you learn property management from the first to the second. Then from second to the third, learn how to raise money. Then third to the fourth, maybe you want to learn about legal, and so on and so forth. You want to really reinforce as you go up, because otherwise, as Ashton said, you're going to topple over at some point.
That's very well said, Adney. Thank you for coming. I think we had a great time. We learned a lot. You know what? I don't let you go. I'm gonna bring you back here within the next few weeks, and then we're gonna. There is no coffee. We cannot sit down together and give you coffee and bring you here. But listen, I think you are so passionate about what you do, same as I, and to give away our knowledge is just a pleasure.
Excellent. I love doing it. That's what I do at my club. I'm happy to share it with you and your group as well. And if you invite me again, I promise I'll deliver some more value. I've got lots of things to tell your group. So,
for the people who are here, what is your phone number?
My phone number is 416. You know what I'll do? I'll put it in the chat. Okay. I'll put it in the chat for you. So that way I'll stop sharing. I'm going to bring up my chat. And I'm going to put in my personal email and phone number. That way, anybody can reach out to me.
Okay. And if anyone, while Adney is typing, if anyone's want to talk to me, my phone number is 647-407-4049. And again, 647-407-4049. And you can always send me an email. My email is very easy. It's deltaland123@gmail.com. So I have your I have your phone number here, 416-875-9575. Guys, it was a pleasure to have all of you here with us. Adney, it was a pleasure to have you back, and we're going to get all of you again.
Excellent. Thank you.
All the best. Thank you, everyone.
All the best.
Oh.